Welcome to the More Realtors St. Louis Real Estate Market Update for March 2012. I'm Dennis Norman, one of the brokers at More, and if you'll give me a few minutes of your time, I'll bring you up to date on what's happening in the St. Louis real estate market. Let's jump right in with real estate news. Here are a few of the headlines from the past month. From St. Louis's best local source of real estate news and information, stlouisrealestatenews.com. Some of the stories included a report that came out that showed some optimism for the real estate market, showed that home prices were up in one of every four markets across the country. An article by a local building inspector that's conducted thousands of home inspections with some helpful spring maintenance tips for homeowners. A story about the number of St. Louis homeowners that are underwater on the rise, so people that owe more on their homes than they're currently worth. Another article about St. Louis foreclosures. 2011 remained flat, which is good, certainly better than an increase in the prior year. Hopefully we'll see some decrease going forward. Also in the article it showed that the foreclosures, the foreclosed homes are selling for about half of a non-distressed sale. And also some other good news, the pending home sales index hit the highest level since April 2010. That's all from stlouisrealestatenews.com. Now let's jump right in with some market data on what's going on in our St. Louis real estate market. The first few slides here contain data for the entire St. Louis metro area. So about 17 counties total, about 8 of them on the Illinois side of the river. This first one here is from our real-time market profile. This is data that's live on our sites. You can see this and much more data at our site, mo-re.com. That's mo like Missouri, hyphen re like realestate.com. And we can see here median price for homes that are on the market across the metro area, $181,255. Jump down here to median asking price per foot, $98 a foot. That's been pretty steady. Average days on market, 188 days, so 6 months on the market. Most of these are have been pretty consistent. We'll jump down here to our market action index, which is 17. Same place it's been for a little while. A reminder here as I jump to the next slide, which shows the history of our trademarked market action index, which goes back to early '09. You can see we're pretty much at the highest level, or near the highest level it's been for the metro area since its inception. A 30 in this index would mean a perfectly balanced market, not favoring buyers or sellers, because what it looks at is supply and demand. And as you get above a 30 up to a maximum of 60, the higher it goes, the hotter the market is, the more it favors sellers, kind of like back in '05, '06. As it goes down below 30 to a low of 0, the lower it goes, the colder it is, and the more it favors buyers. So while we're still in a cold market, as we can see here, we're certainly in a warmer market, if you will, than it's been. This next slide here, I break it down by price ranges. I break the St. Louis market into 4 quartiles. So the 4th most expensive homes down to the 4th most least expensive homes. And you can see the scale down here. The highest priced homes are the black line, followed by the orange line, followed by the green line, and finally this blue line represents the lowest priced homes. And you can see historically they've performed in a reverse order of prices. So the cheaper homes have, it's been a hotter market for that, or a warmer market, and the coolest market's been the highest priced homes. You can see at the beginning of this year, all the markets except for the lowest price kind of converged. Separated again, and I'm sorry, at the end of beginning of last year, and at the beginning of this year, the markets kind of came together too. So the higher price markets are performing better, just like the lower price markets are. But the lowest price market is still shows the most strength, I guess. As we move forward here again for the St. Louis metro area, this shows median home prices. And we can see for the past year, the orange line's a 90-day average, so it's kind of a longer term look. And we can see the prices have went from a below 173 up to a peak about 184 and down to about 177 where they are currently. The black line is the 7-day average. It's quicker to show a change in the market. So we can see here that for the really the past 2 months, the 7-day average has been shooting upward rather significantly. And we can see now this 90-day trend is starting to trend upwards. So I'd say based upon this, we'll probably, which I would expect this anyway, but going into spring, we're probably going to see some increases in prices. And now we're going to zoom in on the market. We're going to come over to just the Missouri side and focus on where the bulk of the real estate activity is in the St. Louis area on the Missouri side, and that's the this 5-county area, what I call the St. Louis 5-county area, which includes the city of St. Louis County, St. Charles County, Jefferson County, and Franklin County. So all the remaining charts and data are for represent those counties combined. And we can see here as far as number of sales and average sales price for this area. We can see here that February, that's the last blue bar here where my arrow is. Blue lined columns represent the number of sales. We can see February had an increase over, over January. It was actually there were 1,887 sales in February versus 1,637 in January. And go back here to a year ago. This bar that I'm on now represents February 2011, and back then there were 1,473 sales. So 1,473 a year ago, 1,887 now. That's a pretty good increase. The green line represents the average sales price. We can see for February it was $132,900, just shy of $133,000. That's just a little bit of a decrease from the prior month when it was $133,325. It was $145 prior to that. Go back a year ago, the average price was $145,000. So while the prices dropped from $145 to $132 on an average in that 13-month period, the number of sales have increased. This is pretty much what we've been seeing. Increased sales, however, pricing still headed downward in a lot of markets. This next slide here is for the past 12 months, actually 13 months. February to February, and it shows the median sales price instead of average sales price, and the median sales price, a little more accurate reflection of the market. As far as the median number of days it took for these homes to sell, the yellow line being the price, orange line or red line being the days to sell. And we can see what price has done. This yellow line is definitely going from December into January, took a big dip down. December's median price was $110,000. January's was $92,000, so a huge dip, a lot of low price sales. February was $101,000, so a little bit of an increase. Still down significantly from a year ago, though. In February of 2011, the median price was $112,500. As far as days on market, we can see what those have done. They've bounced around. We ended, let's see, where February was at 90 days on market to sell. A year ago, February was 93. So while it's climbed over the last couple of months, it's pretty much where it was a year ago. This next slide here, now this is what I call my my realtor scorecard. This shows how good of job the listing agents are doing with, I guess how aware they are of the current market values of the homes they're listing. How well they're using the resources they have available to them to help educate their sellers and to get their sellers to price their homes appropriately. In this market, well, in any market really, it's key for a seller to price their home accurately in the beginning. And especially in a market like this where prices are continuing to decline in a lot of areas, you're just shooting yourself in the foot to come out overpriced thinking, well, I'll adjust it later, because guess what? First off, your house gets shop worn. People have seen it out there for a while, and secondly, when you go to adjust your price in 3 months, guess what? The right price then could very well be lower than the right price would have been at the beginning. And this is really the agent's job to be able to educate the sellers. And this is something, if you're working with one of our professionals at Moore, I promise you, they will know the market, and we have more data and tools and resources available than anybody else in town, and we know how to use them, and we can use all of these things to help you have a successful transaction. But going back to this here, the red line represents the the ratio of the price the home ultimately sold for versus what it was originally listed for, so what it hit the market at. We can see this is pretty pathetic. It's pretty much 90%. There was a little peak here where it hit 92%. It looks like it's jumping upward going into February. Might be upward in the 91% range. So basically, the homes are at least 10% overpriced when they hit the market, which is really poor. We can see the yellow line, which represents the sales price that they sold, the actual sold price versus what the home was listed for at the time of sale, is about 96%. So, and that's not too bad. So we can see that ultimately homes are selling for about 96% of what they're priced at. However, for these folks here, for a lot of folks, they are coming out overpriced to start with. So they're setting on the market, reducing their prices down, and then ultimately getting them sold. This next slide here shows listing inventory in terms of months supply, and we can see that we're at about a 9-month supply. Not, I mean, still over, what would be a healthier supply, like a 6-month supply. At least it's trending back downward. It was down almost, it was about that 7-month supply a couple months ago. We can see it was well over 12 months a year ago, though, so that's making some progress. And finally, here's a 10-year look at the median list price and sales price, the blue line being median list price, green line representing median sales prices. And we can see over the 10-year period the peak and the peak of the market, the bubble, 2006, and then we can see after it bursted, and the decline. And we can see the prices, the green line's actually declining more than the listing prices. That could be representative of one of two things: either a lot of overpriced homes out there, which I think is part of the case, or a lower price market performing better, which is somewhat the case as well. But basically, thus far, 2012's median sales price is pretty low. It's down below 100,000. It's 98.6, and that's been very strongly influenced by the low the low median sales price in January. 2011, the median price was 118. 2010 was 130. The peak of 2007 was 152,311. And going back 10 years ago, 2002, the median price was 127.5. So we're well below where prices were 10 years ago. And yet list prices, the median list price right now is 135, and in 2002 it was 134.9. So the list price is pretty much the same as it was 10 years ago. But guess what, sellers? The sales price is not what it was 10 years ago. Again, this is where an informed agent with the right data, tools, and market information will be a big help to you. So that's something we'd love to help you with. This has been just a quick overview of the market. Our company is led by, you see the three partners there, myself, John Williams, Nick Seapack. All of us have an immense amount of experience in St. Louis in the real estate market. I've got about 33 years, John approaching 30 years, Nick 25 years or more, and we lead the company. We have, you can see here just some of the tools we have available. We have a newsletter up here in the upper right hand corner. It comes out monthly via email. It's something I'd strongly encourage you to subscribe to. It's got a lot of market data, news and information. You can search for homes for sale. You can do lots of things from there. This is original content that we create. You can subscribe to it in a variety of places, but you can do it on our website at mo-re.com, or you can go to stlouisrealestatenews.com, and in the upper right hand corner you'll see a box to sign up. We've got charts and market data available, real-time market data, stuff that shows you what's going on now, stuff like you won't see from anybody else in town. We have that for every market in St. Louis. In fact, we can help you out of town too. We have market data for throughout the country. So if you're relocating to another state, or you're relocating here from another state, please contact us too and let us show you we've got market data that may help you where you're at as well. You can subscribe to this. You'll see here the arch. This market update is produced on a podcast that you can subscribe through to on iTunes. Go to the iTunes store and search St. Louis Market Update, look for this logo and click on it. Also, right here we got 2 QR codes. Scan those, and the one on the left is will take you to a web page with a lot of resources for buyers and sellers with QR codes as well as the URLs, so you can go to them and get yourself a lot of resources that we have available. On the right is our free St. Louis real estate market forecast for 2012, and it's filled with a lot of good information, including where we see the market performing best at. And here's a legal disclaimer, and you can come back to that because I'm going to go back to the QR codes. Okay, that pretty much wraps up things for this month. If you've been following this for a while, this used to be, I used to do these market updates weekly. I did switch them to monthly. We're now doing a monthly around this same time of the month, roughly around the 10th to 15th of the month. Because quite frankly, a lot of the market data, especially in terms of the sold data, you really need a month's worth of data for it to be significant. So this allows us to look from month to month. We do have our real-time data in there as well, but anyway, so it's produced monthly now, and so until next month, thank you for being here, and God bless you.